If this is you, do not buy a house right now. What's happening, everyone? Welcome back to Bigger Pockets. I'm your host. I am a real estate investor, a content creator, and all-around real estate nerd. And if you are one too, make sure you head on over to our website and apply to be a member. We would love to have you join our community of over 1 million other real estate investors and aspiring real estate investors just like yourself. And so in today's video, I'm gonna go through 7 signs or sort of red flags that if you are experiencing any of them right now, buying a house probably isn't the best financial decision for you. It might be worth waiting it out. Of course, this is not financial advice. These are just things to consider. But let's get into it. No one, if your income hasn't been stable for the past 2 years, don't buy a house right now. This is really important, especially with what's going on in the market right now. We are seeing interest rates rise. So that means lenders are going to require more documentation, more proof of income. They want to see W-2 South. They want to see tax returns, bank statements, pay stubs, all of that good stuff. And if your income has been stable for at least 2 years, you can show them exactly how much money you've been making year over year. But if your income hasn't been stable, maybe you've only been working for 1 year. Maybe you switched careers. Maybe you're starting a new business. Whatever it is, don't worry. I mean, it doesn't mean you can't buy a house. It does mean you should wait until your income is a little bit more stable, because lenders do like to see consistency. And if you can't show them that you can be consistent with your income, they're going to be less likely to approve you for the loan. So if your income hasn't been stable for the past 2 years, just wait it out. Continue working, continue saving up for that down payment, and eventually, when you do feel like you have a stable income, then look into buying a house. Number 2, if you have too much debt, don't buy a house right now. Debt can be a great thing. Debt can help you build equity, especially when it comes to real estate. There's good debt and there's bad debt. Bad debt would be things like credit cards, personal loans, payday loans, any of that. Good debt would be things like student loans, car loans, mortgages, any of those things that are helping you build equity. That being said, lenders are going to take a look at your debt-to-income ratio. They want to see how much of your monthly income is going towards paying off that debt. And if you have too much debt, even if it's good debt, you're going to have a hard time getting approved for the loan. So if you have too much debt, just focus on paying that down before you start looking into buying a house. Number 3, if you are in between jobs, don't buy a house right now. Similar to the first point. Lenders want to see stability, especially when it comes to your income. So if you are between jobs, I wouldn't recommend buying a house right now. Now this is different for everybody. Everybody's situation is different. But generally speaking, if you are between jobs, lenders are going to be a little bit leery about giving you a loan. So if you are in between jobs, I would say continue saving. Continue building up that emergency fund and wait until you have a job lined up before you start looking into buying a house. 4, if you have a low credit score, don't buy a house right now. Having a low credit score can be detrimental when you're trying to buy a house. Your credit score makes up a large portion of your debt-to-income ratio. And lenders are gonna look at that to determine whether or not they gonna give you a loan, and also what interest rate they gonna give you. So if your credit score is below 620, I would say work on building that credit score up before you start looking into buying a house. A lot of people say you need a 640 score in order to buy a house. I've seen people with 620 scores buy houses. So it's definitely not the end of the world. If your credit score is below 620, you can still buy a house. But you're going to have a hard time finding a lender that will work with you. And if you do find a lender that will work with you, you're going to have a higher interest rate. So if your credit score is below 620, I would say work on building that up before you start looking into buying a house. Number 5, if you don't have an emergency fund, don't buy a house right now. Buying a house is expensive. There's a lot of closing costs. There's a down payment, there's inspections, repairs, all of that stuff adds up. And so if you don't have an emergency fund, don't buy a house right now. You want to make sure you have enough money saved up to cover those costs, but also to cover any unexpected repairs that might come up. The last thing you want to do is buy a house and then have something break and not have the money to fix it. So if you don't have an emergency fund, continue saving up before you start looking into buying a house. No. 6. If you live in a high cost of living area, don't buy a house right now. Now, this is kind of a tricky one, because it depends on where you live. Obviously, if you live in California, New York, DC, all of these high cost of living areas, the housing market is going to be extremely competitive. So if you live in a high cost of living area and you're re-looking to buy a house, you're probably going to be priced out of the market, so it might be worth looking into other areas or just waiting it out. The housing market is always changing. So just because you find a house right now that meets your needs and budget doesn't mean you won't be able to find something later on. So if you live in a high cost of living area, don't buy a house right now. Wait it out, see what happens. And finally, no. 7. If you have no money down, don't buy a house right now. This is another tricky one, because there are programs out there that allow you to buy a house with no money down. But those programs are very competitive. They're extremely difficult to get approved for, and they usually come with very strict guidelines. So if you have no money down, don't buy a house right now. Save up for that down payment. You want to make sure you're ready to buy a house. Putting down 20% is always ideal, because that way you're not going to have to pay for private mortgage insurance. PMI. PMI is an extra monthly cost that you have to pay when you put down less than 20%. So if you're able to save up 20%, that's ideal. But if you can't save up 20%, don't worry. There are programs out there that allow you to buy a house with as little as 3% down. So if you have no money down, just continue saving up, and once you do have that down payment, then look into buying a house. So those are 7 signs that you should not buy a house right now. Of course, this is not financial advice. This is just general information. Everyone's situation is different. So make sure you talk to a financial advisor before making any big decisions. So I hope you guys enjoyed this video. If you did, please hit the like button. It really helps us out a lot. And if you haven't already, please subscribe to our channel. We would love to have you join our community of over 1 million other real estate investors and aspiring real estate investors just like yourself. And if you're on social media, you can follow me for more real estate tips and tricks. Thank you guys so much for watching, and I'll see you next time.